equity, and opportunities.
Welcome back to Business Equity and Opportunities. As you finish up your taxes, or for those who haven't started yet, our CPA, Courtney Kincaid, reminds you about the new rules on taxing tips and overtime.
This is Business Equity and Opportunities, accounting and bookkeeping.
I was with you a few weeks ago to talk about tax conformity and what the Indiana legislature was going to do. A lot of people see federal tax law changes and don't always notice or know that the state has to either conform or decouple. So are they going to do the same thing as the federal tax law, or are they going to change? And so one of the things that we tackled this session with the passage of the One Big Beautiful Bill Act at the federal level was, what were we going to implement here at your state tax level? We did quite a lot of negotiation and back and forth to see what, quite honestly, what Indiana could handle from a bill, right? Because it costs money for the state to give tax breaks. And one of those areas that was really up in question was overtime pay and tips. A lot of people were seeking clarity there, and last time I was here talking to you, I was talking about being patient with your CPA because they were waiting for that guidance. Session ended officially last week, and some bills that did pass out of both chambers of the legislature are now sitting on the governor's desk. And one of those is Senate Bill 243, which had a number of tax conformity issues in them. And one of those is related to overtime and tips. And there's some really important things. We might think, well, that's for the taxpayer or the employee, but it's really important for the employer to prepare for this. One thing to note that's really important is that this is, at this time, temporary. It is only applying to tax year 2026, so the year we're currently in, which will be filed in 2027. And they're going to give some tax benefit for that overtime pay and tips. But that creates some challenges for employers, where some of that income was just reported as one lump sum in the past. It's going to report differently. So some compliance changes that need to take effect now in order to have that be able to be implemented for 2027 returns. So for example, you're still paying time and a half. However, you need to know what portion of that pay that you gave to your employees was overtime pay, what was tips, and what was regular earned income. And this is not a compliance exercise necessarily that some small businesses have had to do in the past. And so we really recommend connecting with your CPA to better understand how that will need to be reported, what systems updates will be needed. Something else would be to reach out to your payroll provider if you're working with a third party to make sure that that's all going to be reported on next year's W-2 appropriately. In addition, there is still a lot of time in the subsequent sessions, so 2027 legislative session, to see if we're going to have some further developments as it relates to what happened in the One Beautiful Bill Act. $250 million is kind of what they're saying is the 2026 fiscal impact. Indiana only does their budget every other year. This was a short session. We didn't open the budget, so this might be a permanent change, but for now it does remain temporary. So again, just something to connect with your CPA about, making sure that you are doing what you need to do so that you don't get into a compliance challenge at the end of the year for next year's tax season.
A reminder, the tax deadline for S corporations and partnership filings is March 16th. Check with your CPA or financial advisor if you have questions. This week, our Business Equity and Opportunities poll reflects the ongoing challenges many employers are facing. Here's our question for you. What do you believe is the biggest threat to your business right now? Cybersecurity, the supply chain, AI misuse, or the workforce? Let us know your answer, and we'll post the results in our newsletter. Coming up, Emil Ekiyor introduces us to another dedicated social enterprise. This one is helping build up lives and neighborhoods.